RSI is one of the most used indicators in the world. Traders have relied on it for decades. But here's the question. Nobody wants to answer honestly. Does it still work in 2026? In this video, I'm going to show you the real answer, not the version that sounds good, the version backed by what actually happens on a chart. We'll cover what RSI is, where most traders go wrong with it, and a smarter way to use it that still holds up today. Stick around, because the way most people use RSI is exactly why they lose money. RSI stands for Relative Strength Index. It was created by J. Wells Wilder Jr. and published in 1978. That's almost 50 years ago. So why are traders still using it? RSI measures the speed and magnitude of recent price moves. It runs on a scale from 0 to 100. When it's above 70, the asset is considered overbought. Below 30, oversold. Here's the formula. Don't worry, you don't need to calculate this manually. RSI equals 100 minus 100 divided by 1 plus the average gain over the average loss across a set period. By default, that period is 14 candles. What this actually tells you, it measures momentum. It tells you whether buyers or sellers have been winning recently. That's it. It doesn't predict the future. It describes the present. Now, here's where most traders misread this tool entirely. All of this is available for free on TradingView. It's the platform I'd recommend for actually plotting RSI on your own charts. Link is in the description. The biggest mistake traders make with RSI is treating overbought and oversold like buy and sell signals. They see RSI cross above 70 and immediately short the market. RSI drops below 30 and they go long. It sounds logical. It's also one of the fastest ways to lose money in a trending market. Here's why. In a strong uptrend, RSI can stay above 70 for weeks. Look at this chart. Show example. RSI hit 72. Traders shorted. Price went another 30% higher. RSI can stay overbought the entire time. The same thing happens in downtrends. RSI sits below 30 and just keeps going. Traders call it a bottom, but the market doesn't care about their RSI level. This is where RSI gets a bad reputation it doesn't fully deserve. The indicator isn't broken. The application is broken. SI is a momentum tool. Using it as a reversal signal in trending markets is like using a speedometer to tell you which direction you're going. It describes one thing. Traders are asking it to do another. So what does work? 3 approaches that hold up even in today's market environment. Number 1, RSI divergence. Divergence is when price makes a new high, but RSI doesn't. Or price makes a new low, but RSI doesn't follow. This tells you momentum is fading, even though price is still moving. Bullish divergence. Price makes a lower low. RSI makes a higher low. This is a signal that sellers are losing strength. Bearish divergence. Price makes a higher high. RSI makes a lower high. Buyers are running out of steam. Divergence isn't a guaranteed reversal, but combined with a key level or a trend line break, it becomes a high probability setup. Number 2, RSI with trend context. Never trade RSI. Signals against the main trend. If the daily chart is in a clear uptrend, only take RSI oversold signals as entries, not overbought signals as shorts. Filter your trades to go with the trend, not against it. A simple rule. RSI below 40 in an uptrend is often a better buy signal than RSI below 30 in a downtrend. Number 3, adjusting the period. The default 14-period RSI was designed for end-of-day stock charts in 1978. Crypto trades 24/7. Intraday traders need faster signals. For swing trading, 14 is still reasonable. For day trading, try RSI 9 or even RSI 7. It's more responsive. For longer-term position trades, RSI 21 filters out noise better. The key is, the settings should match your time frame, not the default from 1978. You can set up all of these directly in TradingView. Free plan covers everything I've shown here. If you trade multiple time frames regularly, the Pro plan lets you view several charts side by side, which makes a real difference. Link in the description. First example, Bitcoin, Q for 2025. RS on the weekly chart dropped below 35, while price was making a slightly lower low than the previous correction. Classic bullish divergence. Traders who waited for a trendline break on the daily chart got a clean entry. RSI came back above 50. Price followed. Second example, a major stock during earnings season. RSI was at 78 on the daily. Traders who shorted got crushed as the stock ran another 20% on strong earnings. But traders using RSI divergence on the 4-hour chart, where RSI started making lower highs while price was still grinding up, got an early warning of the reversal. These aren't cherry-picked examples. They're what RSI divergence looks like when you're watching the charts regularly. The common thread. RSI alone didn't make anyone money. RSI in context, with price structure, with trend, with a confirmation signal. That's what works. So is RSI still reliable in 2026? Yes, but not the way most people use it. Markets have changed. Algorithmic trading, 24/7 crypto markets, high-frequency liquidity. All of this affects how indicators behave. Mechanical overbought/oversold signals are easier to fade now than they were in 1990. But divergence still works because it's based on a logical principle. If momentum is weakening while price is still moving, something is likely to give. That principle doesn't expire. RSI as a trend filter still works because momentum as a concept is fundamental to how markets move. And RSI period adjustment still works because different time frames have different characteristics and you should match your tools to your context. What doesn't work is treating RSI as a standalone oracle. No indicator is that. The traders who use RSI will use it as one input among several. The traders who blame RSI for their losses were probably using it as their only input. That's RSI, the honest version for 2026. Momentum indicator. Powerful in the right context. Dangerous when misapplied. If this helped, subscribe. I publish trading education content every week, always trying to cut through the noise and focus on what actually works. Drop a comment below. How do you use RSI in your own trading? I read everything. See you in the next one.